Welcome back to the channel. In today's video, I want to talk about the principle of getting richer by the day. Hence the title, Every Day I'm Getting Richer and Richer. Well, what does that mean? So before I get into that, I just wanted to talk about the logo here of the Maneos compounding machine. You see, seek out the sun. Always admired people who challenge the norms, who try to fly to the sun. Obviously, it's a reference to Icarus trying that and failing. But it's really kind of the spirit of anthropos metron, which is a Greek saying, man is the measure of all things. It's the spirit of the classical age of Athens, of the high Renaissance, of the Florentines, of 19th century Romanticism, of challenging norms, challenging limitations, and trying to do great things. So, but this formula is to me the most important mathematical formula that I know with regard to investing, and it's the compound interest formula. For those of you who have studied investing, you know that the power of compound interest. There's many examples, and if you're ever interested in it, you could just pull a compound interest calculator out and start playing around with it, and you'll be blown away by some of the figures you can input. You know, if your dollar costing $500 a month at 10% or 1,000 a month, and so on and so forth. So I want to pull over here away from the Maneos compounding machine to TD Ameritrade, one of my brokerage accounts here. And what I have displayed is this right here. And this is the dividends for the last 7 days. So you can see SDY. This looks like not a dividend, but a merger. VGI, VIGI, VYMI. These are Vanguard International funds, VPL, some different Vanguard index funds, what I like to call vanilla index funds. So a bunch of these. You see XLE, which is an energy ETF. I mentioned that in yesterday's video that I was buying XLE and another energy ETF, and I always either reverse it. I think it's BGR or BRG, but I believe it's BGR. We can pull that up and verify that's another. I think it's a BlackRock energy fund. But I was buying these, when oil was trading at $0 negative. I was buying these funds, and now oil is at $80. So you see MJ, marijuana. A lot of millennials are into the CBD thing, so it's not my cup of tea. But to quote Carl Icahn, I'm no Robin Hood. I enjoy making money, right? So I'll pull that up in a little. But so yeah, if that's your thing, mazel tov, So Lockheed Martin, you got a Schwab fund, you have BP, another energy fund, then some leverage ETFs gave some dividends. The last two are interesting. PFFA is preferred shares. And that's a favorite of the Seeking Alpha writer, Ridra Mora. He loves like the PINCO closed-end funds, PTY, PCI, and also PFFA. QYLD is interesting. I'm filming this for YouTube, and QYLD and NUSI are kind of like YouTube cult ETFs, meaning there's just a lot of videos on QYLD and NUSI and other covered call ETFs. And I think the reason for that is there's a lot of people on YouTube that are younger, and with the resurgence of something like the FIRE movement and the CNBC's Make It, where they show these people that are like retired at 35. I think they understand when you do the math, like if you're buying Johnson & Johnson as a dividend stock at 2%, you have to have X amount of capital. But if you can find these what one might call cute ETFs, where they're doing things with options and they're using a little bit of leverage and they're doing certain things where your dividend yield is 4%, 6%, 8%, with $500,000, $1 million, you start to maybe that pays your rent somewhere, or what have you. So that's why I think it's popular, a lot of these funds. I like to own like a lot of different things in this particular brokerage account. So what's powerful though for me on this is, I'm 41, and PFFA and QYLD, do you see how I reinvest these dividends? This is only showing the dividend coming off, but if I showed the transactions, you would see that it reinvests. So it's $8 from QYLD, $6, $6.72 from PFFA. In 20 years, the monthly dividends that could come off might be, and I'm just throwing this, on the top of my head, but it could be, $50, $100, $150 by just taking those dividends, reinvesting it back into the fund, and then the next month it shoots out more and more and more. And that's really the power of compound interest, what Warren Buffett would talk about, the snowball effect. So I think it's crucial to reinvest your dividends. Now, there's some people that I've seen, and this is fine too, in my opinion, which is they don't reinvest their dividends. They let everything go to cash. And then at the end of the month or in the middle of the month, they allocate that cash into opportunistic opportunities. So something where, oh, this is undervalued, or this just sold off, or so they allocate it, instead of just reinvest it into the fund itself, they make a conscious decision as to where they're allocating it. But nonetheless, it's not sitting in cash. They're making that monthly allocation, that monthly purchase. So the reason, again, I titled this "Every Day I'm Getting Richer and Richer" is, as you can see with the stock market, there's been a lot of volatility. And with that volatility, my account, this particular account, I have multiple accounts, but this one is, has been up to like 651. It's been down to 610. It really sold off yesterday again. Then it's back up a little bit today. At least with the futures, we're at 924. The market opens in 6 minutes or 5 minutes here. But regardless of what's happening, I am receiving dividends and purchasing more assets. And so what I'm doing is, if the market sells off on these days when these dividends are coming off, I'm almost grateful because I'm repurchasing these assets at cheaper prices. So it's a beautiful thing. As you guys can tell, I'm most definitely a disciple of Warren Buffett and Charlie Munger at Berkshire. I've read every single annual report in Berkshire Hathaway. And, Buffett has this line, I often quote it, the market is there to serve you, not to guide you. And I think that's very, very important to keep in mind. One might say, no matter what Mr. Market is doing, and anytime you hear a Mr. Market, you know that the person has read Benjamin Graham, or even if they don't know it, they're referencing Benjamin Graham there. But yeah, so I am, and this is how, let me go back here, and this is how things like this happen. This is how fortunes are made. And I literally made a fortune, well, depending how you define a fortune, but in my feeling, I made a fortune in the panic of 2020 because I did exactly this. With my contributions and allocations from option premium and dollar cost averaging, I was purchasing the most out of favor sectors. Learned that from Carl Icahn. And I was reinvesting dividends on things that when they came out of this panic, went up 3, 4, 5 times. So again, this is how a fortune was made in 2020. So I'm glad that I have this account in the history here. February 19th, 365, down to 201, 203, whatever was a low, March 20th. And, we're at 622. You can see the high here was like 643, 649. It looks like, let me see here. 651 was the high. So you can see that from 203 to 622. So that's 303, 403, 503, 603. We're at 400 plus $1,000 increase. Now, some of that is dollar cost averaging. I mean, I show my returns, which is 29% right now on my Seeking Alpha monthly letter, as well as the Maneos compounding machine. But I'm just showing you that look, in the next panic, since we're at a high valuation, the next bear market, this is going to go maybe down to 300. It's going to go down 50%. But by reinvesting those dividends again, dollar cost averaging and picking up things that are on the cheap, so to speak, I feel I'll make another fortune and another fortune and another fortune. So just wanted to share that with you guys. And again, I got monetized yesterday on YouTube. So very happy, very grateful to YouTube. And it's been cool to see some of the advertisers that have been on the page. I think I saw John Hancock and Yield Street, some financial companies, and then Peloton and Kit Kat and just different companies, advertising on my channel. So very much appreciative to YouTube, different advertisers that have, I don't know if they actively select that. I'm not sure how the algorithm works. I doubt they actively selected it because I just got monetized, but anyway, so yeah, just happy about that. And yeah, the last thing, and I kind of referenced it earlier here, Carl Icahn, um, he says here, I'm no Robin Hood. I enjoy making the money. I'm no Robin Hood. I enjoy making the money. And just, if you're younger, if you're in your 20s watching this or 30s, you'll find a lot of people in that age group are, they trend a little left. They want to be activists. They want to, change the world. It's a competitive advantage for you if you have the mentality of a 1920s robber baron, a 1920s gangster, a Carl Icahn, a Dan Penna. You may not like these people. You might, their personality, they're too loud, they're too this, whatever you think about them. But for you, if you're focused on money making, while other people are focused on, oh, this person said this, and this company's doing this, and this one's doing that, we have to protest. If you focus on money making and others focus on activism and protesting, they're going to end up with nothing at the end, and you're going to end up with the gold. So just keep that in mind. That might be a little brutal. It might be a little ruthless. It might be a little Henry Kissinger, realpolitik. But at the end of the day, keep that in mind. That's something that's changed my life, that shift in mindset. So, all right, guys, that's pretty much it for today. Going to sign off. The market opens. Let's see if it opened. Let's just go back here. Yep, the market just opened up about 83. Let's update this. Yeah, so it went from 1,000 to 3,000, and that's a cool little showcase there. That if you're watching this and you're working for wages, you're an employee, a salaried person, you can just see on literally on a refresh on a screen. Once you accumulate wealth, it's a $2,000 upswing. Now again, it goes the other way, but just showing that sort of volatility there. So, all right, guys, really appreciate the likes, subscribes, shares, all of those things. Take care.